Let's talk about your latest forecast.
Daniela, the most important number in the world right now is $520 trillion. That is, by the way, 6.2 times 84 trillion GDP in financial assets. I am predicting within weeks or months, the central bank's just going to lose control of it. It's just going to burst. If you notice, and this is the reason for my prediction here that we're going to see a 40% plus crash in just the next few months. Every correction since the January 2018 top, that was when the real bubble started to top. And then we get all this seesaw backing up. We get a crash, we get a new high, and then every time we've got a crash to new lows, which means the market is trying to go down. We've peaked. And the next new low would project 2,100 on the S&P 500. That would be 45% from the recent top. That would mean the tech stocks would go down even more, maybe 50%. So I think the next crash, what people finally see is the central banks keep pumping up the economy against these downtrends, creating this monster bubble that keeps wanting to burst and deleverage along with the debt, and it's a losing battle. And when people say, well, yeah, don't print another, I'm sorry, don't bother to print another 10 trillion this time. This thing's over. This thing, they lose control. And that's just going to be the first crash. And we'll end up by late 2022 or early 2023 back down 80 to 90% to basically erase this entire crazy bubble. Now remember, greatest bubble in history has occurred from 2009 into 2021 with the weakest recovery in history. Is the biggest disconnect between stocks and financial assets and the real economy. And guess which one wins? The financial assets and the stocks have to come down to reality. Hundreds of trillions, Daniela, at least 200 trillion minimum of this 520 is going to disappear in the next 2 to 3 years. And that does not cause a recession. That causes a depression.
A lot more questions now. You're saying that the Fed can't even save it here with their liquidity pumping.
What did they just do? We had the COVID crisis. Perfect trigger, by the way, because it's hit a death blow to the economy. We've recovered V-shaped 80% back, but we can't get back to 100 because there's a lot of industries that simply can't. Travel, entertainment, large parts of retail, on and on and on. So they printed in 8 months as much as they did in the entire 80-month QE cycle before it. So they're having to print exponentially more to stop each crisis. And guess what? We're already, the consumer spending, and I've been predicting this, already weakening again. And basically, people say, well, wait a minute, you just printed so much. I mean, the market did race to new highs on that, but the market's way ahead of itself, and the economy is not following it. So when people see, it doesn't matter how much they print anymore, they're going to have to print $10 trillion next time. And people are just going to say, I'm sorry. The investors are going to say, I'm sorry, I'm not betting on this double down, double down, double down, double down theory. Because you know what happens when you keep doubling down. I don't care how many times you win, you end up at zero.
So on the note of consumer spending, Harry, are you not confident in reopenings helping the economy? Guess not.
No, here's what I see. You know how long this vaccine is going to take to be effective? At least late summer, early fall. You know how long that is? That's light years in an economy that's way overstimulated and all these problems. And we're not handling the COVID well. I sometimes believe the theories that it's a secret plot by China to put a virus out in the world that Westerners can't adapt to. Asian cultures are conformists. They do what the government says. They lick this thing right off. We don't lick it. Oh, we don't want to wear masks. You're taking away our freedom. That's the Western response. We're not handling it well. This thing's going to be around longer. And yes, eventually the vaccine may eradicate. I say between now and next fall, this whole thing's going to fall apart before the vaccine can be effective. Then it's not going to even be an issue. Oh, yeah, people are less worried about the thing, but everything's crashing and then people are spending less. You know how it's a self-fulfilling prophecy once a downturn gets rolling. We have so much leverage. Again, remember the number, 520 trillion financial assets in the world, 6.2 times GDP. That is like a mushroom cloud getting ready to just implode. There is no way to stop that once it starts. They couldn't print. So again, remember the other number, at least 200 trillion will disappear. So are they going to print $200 trillion to replace that deficit?
Correlation there between why there's also a huge push towards central banks wanting to roll out digital currencies. Is that some way out of them getting out of debt? Do you see any link there?
No, they're just trying to fight the real Bitcoin and blockchain revolution. They're going to be a big crash first, because this is a big first stage bubble like the dot-coms on a 20-year lag. I've got this in my February newsletter, just perfect correlation. You can see Bitcoin is going just like the dot-com, big bubble on high valuations on an early stage, which is way overvalued, big crash, a lot of them go under, and then the real revolution comes, and you got the internet being the biggest boom in history into recent. So that's the same thing going on here. Blockchain can restructure monetary systems with a potential Bitcoin gold-like standard at some point when Bitcoin gets high enough and stable enough, where you could have a bottoms-up system that grows totally by transactions of consumers and businesses and governments, and is no longer top-down micromanaged by central banks and politicians who always overstimulate, always push down their currencies to cheat for exports. All governments do is manipulate in the wrong way. We got to get rid of this. Now that brings me real quick, 250-year, another giant cycle hitting here. This is very rare, Daniela. You see this many. The Protestant Revolution 500 years ago took down the Catholic Church down to where reality. Okay, they controlled everything, and then the monarchs controlled everything. Well, democracy in the United States, late 1700s, 250 years ago, took down that and brought democracy and free market capitalism from Adam Smith in Scotland and a whole industrial revolution. This now, I think this revolution's about bottoms up monetary system. Again, everything's about let the people make more decisions, let power go downward, decentralize. And this whole GameStop thing was just the first little taste that little guys can take down a hedge fund. Whoa.
Yeah, I wanted to talk to you about that. I'm happy you brought that up. I think Mark Cuban was even talking about this yesterday, saying like, this is not going to go away. It's not like some guys lost money, put their tail between their legs and they're never coming back. I mean, how will this change the landscape of Wall Street here? I mean, are hedge funds going back to the table now thinking, okay, we need to strategize. How do we stop this from happening again? How does this play out, Harry?
Okay. Here's what happened. We have a lot of imbalances in the economy. Let me draw a quick picture for you.
Yeah.
Federal Reserve and central banks decide to print massive amounts of money to pull us out of a recession that looked like a depression, and it would have been a depression. They were right about that. So they wanted to pump our way out of it. They print all this money that only goes in, they're only buying bonds and financial assets in the markets. They're adding new money printed out of thin air to an existing base of financial assets. Number one, that's going to push up assets and always end up more in stocks in the end. Okay, number one. Number two, Wall Street, all the big hedge fund managers and leveraged traders, they say, oh my gosh, now that we know that the Fed's going to consistently push up stocks and down short and long-term interest rates, we can make leveraged bets. We can add a lot of leverage now to long-term trades. So they're adding leverage on top of the financial injections by the Fed. So now there's even more money chasing those stocks. And what it's led to, and I've been warning everyday traders and investors about this for many, many years, exactly what's been exposed here. The large traders see everything. They got better information than us, faster transactions, more access to leverage. They see when everybody's going in one direction, they will attack it with what I call predatory investing. It's not just simply, oh, we think this market's going too high, so we'll bet against it and short. No, they short with 10, 20 times leverage, and they push the markets down strongly, force all the bullish people to capitulate. And when they capitulate, they turn around and buy their stocks and then play the next run up. It's predatory. It's not good investing, and it's not fair to everyday investors. Well, these everyday investors now get on, Robinhood and Reddit, and they can talk, and they're like, now they're saying, well, you know what? They look at everything we do. There's one thing we can see that they're doing. We can see when they're over shorting a stock. And what they do is now we see them, they're leveraged to the hilt, expecting to push it down. What if we push it up with thousands of traders against them, force them to capitulate the other way? In other words, this GameStop, this Robinhood Reddit trade has done to the hedge funds what they do to everybody else. So to me, what's important here, Daniela, we're exposing an imbalance in the markets. There shouldn't be so much leverage. Options and futures were created so real businesses could hedge real commercial risk on having to buy or deliver commodities or financial assets in the future. It wasn't designed for predatory investing and to leverage up and just manipulate, force markets down or force markets up. And again, now the little guys can do the same thing. So good win for the little guys. But what it does is I think it's going to be a big issue, especially when this bubble crashes again, just like people will finally question, well, did central banks do us more good or harm? Answer, harm. It'll be, wait a minute, all this, whether the central banks are or manipulating markets with leverage or gangs of traders, mobs of traders, let's call them, it's not a good thing for investment. It creates a casino economy. And so I think there's going to be simple regulations. All you have to do is disallow high leverage except for things that are really hedging operations and not for predatory investing. So I think this is part of the revolution of many things. And it's going to be a good change when it happens. But again, it's going to take the bubble bursting and people seeing the cost of excessive monetary creation, a cost of excessive leverage in investing, creating such a bubble that when it bursts, it overnight destroys $2 to $250 trillion. Again, you can't have that much money disappear without creating a depression. This will not be a recession. On the other hand, my good news is because I understand demographics and understand how fast you can deleverage these things, like 29 to 32, I think by 2023, we're going to be coming out of this with the millennial generation. So this is not going to last 10 or 12 years.
Okay.
The next 2 or 3 years is going to probably be the worst we see in our lifetime.